Hey everybody, and welcome to another episode of Time, Talent, Treasure Radio. I'm your host, Jared Sebesta of Taatjes Financial Group, where we build purposeful retirement plans. At Taatjes Financial Group, we believe retirement planning is so much more than just preparing financially. Our goal is to help retirees and pre-retirees steward their time, talent, and treasure. We have the tools and proven process to make sure your retirement plan delivers the greatest purpose, impact, and legacy. If you need help building a purposeful retirement plan specific for your situation, your life, and your retirement, give us a call. Our number is 222-4236. You can request a meeting at our website, taatjesfinancial.com. And if you are in the neighborhood, just stop by our office. We're located right on 19th Avenue Southwest in Wilmer, building purposeful retirement plans. Thank you so much for tuning in today. We sure do appreciate that you are here. Before we get started, just a reminder, many ways that you can find us here on Time, Talent, Treasure Radio. First of all, every show is logged on our website, taatjesfinancial.com. You can now find us on iTunes. If you're into podcasting, go on to iTunes, search Time, Talent, Treasure Radio. Also, we are now on YouTube, so all of the shows that you are hearing are logged on our YouTube channel as well. You got to go to Taatjes Financial and search that on YouTube. You'll find our channel. Subscribe on all these methods because all these platforms, you're going to get the latest and greatest content out of our office. Just another side note. Last week, we had our latest online seminar called 5 Simple Shifts to Reduce Money Worries and Love Retirement. The typical American dream retirement, we believe, is a flawed concept. There's a different way to do retirement that's going to help you reduce your money worries, love retirement more, have the biggest impact on the people around you. We had a phenomenal response for this online seminar. If you missed that, just a little side note here, that particular seminar is on YouTube. So if you go to our YouTube channel, click on the latest online seminar replays, you will find the recording of that seminar on there as well. So another reason to check out our YouTube channel. All right, we are continuing today our series on retirement tools. Several weeks ago, we talked about eMoney software. We talked about how that is a really important tool for us creating purposeful retirement plans for our clients. And then we talked about a number of people on our team, their designations, their specialty. And last week, we talked about fixed income options. As interest rates have risen over the last 12 to 18 months, as you have noticed, so have rates of return on a number of fixed income options, including treasuries, fixed annuities, and municipal bonds. Ben Taatjes and I talked about that. That was a really interesting show because we're seeing that becoming a more popular option for people in the last several months. If you missed that show, again, go back on our website, find us on iTunes, listen to that show, read what it's all about because that's some important information. Ben Taatjes joins me on the show here today. Any recap from last week or how that's going to kind of turn into this conversation today as we talk more about interest rates, how that's kind of playing into the kind of the whole situation of the economy here today?
Yeah, I think what we talked about last week does tie into what we're going to talk about today, and that is that interest rates. If you're not careful with the duration and the time that you're holding specific fixed investments, you may find yourself in a lot of trouble, as did Silicon Valley Bank. So I think that's really the talk around the market this last week is, what's happening in our banking system, and again, what the Federal Reserve has been talking about in regards to that, and then again how the FDIC stepped in with Silicon Valley Bank.
It seems kind of interesting. We were just talking about fixed income options, and that was kind of a major player in the fall of this bank. Can you give people just kind of an overview on your opinion on kind of what happened and how that tied into play there?
Yeah, sure, Jared. So Silicon Valley Bank kind of had a niche market where they really focused on lending and gathering deposits for kind of venture capital firms. Not a ton of really business with the public, but they had some of that, of course, too. And what they had, and really the problem that arose did not come up because of credit risk, but more interest rate risk. And that's kind of what we were talking about last week. With interest rates being so much higher now than what they were in the past, that can be a good thing going forward. So if you've got cash today, you can see it as a positive. But if you, like Silicon Valley Bank did, had really long-term bonds that you've bought that were needed and you're forced to liquidate in this environment. They're purchased prior to this huge spike in interest rates, and now they have to be sold. Well, because now we can get higher interest rates than we could before, that means that they're worth less. Again, that really ties into exactly what we were talking about last week. What has become a positive for people looking for fixed rates today, if you've got old bonds that are paying a lower interest rate and you're forced to liquidate them now in this environment, which this bank did, you can end up getting back less than the par value.
I'm not going to sit here and pretend like I know all the ins and outs of what happened, but you saw the pictures of people standing outside the bank. Is it as simple as people wanted their money from their bank so they could do whatever they wanted with it, and the truth is the bank didn't have it because they were tied up in these fixed income options? Is that in layman's terms, is that what was happening?
Well, essentially, the bank was again forced because so many people were withdrawing again and taking their funds out, so they were forced to then liquidate before they would have wanted to at the maturity value. So that, again, it wasn't credit risk, it was interest rate risk, and that is something that is a real risk today. So we don't know where interest rates are going. The feeling is that they seem to be moving up. The Fed tells us they're going to move up. We'll see, right? As we continue to see this whole situation develop. But I think what was encouraging to see is that the Federal Reserve came alongside and said they were going to safeguard as best they can. And you can read more about this on the U.S. government's response. They have issued a joint statement, the FDIC and the Federal Reserve did together. So I think what you want to do is maybe read that. But again, they were trying to say, hey, don't panic. We're covering and helping with these deposits.
All right, so let's bring it home here. What should some of our listeners do? What's kind of the takeaway from this fallout from Silicon Valley Bank that people can take home from this show?
Well, a couple things. I think remembering that to be careful of when you tie up money for long periods of time, right? I'm kind of surprised that's what happened with this bank because we all kind of felt that interest rates were going up. But again, be very careful when you do tie up money and know that if you're forced to liquidate it prior to its maturity date in one of these bonds, that you might not get your full amount back, okay? So that's one thing. But I think bigger than that is just remembering that volatility in the market, which of course followed based on what was going on in the banking system. Volatility is part of investing. It is inevitable in markets, and I think making sure that you understand the risks of what you're investing in, you have a well-diversified portfolio that doesn't guarantee you against loss, but in situations like this, it can help, right? So again, you want to make sure you have a well-diversified portfolio, understand there's volatility in the markets, and create a plan, right? And have a plan for each dollar and understand, when do I need that money, right? Many times when we work with a client, we say, okay, what's your time horizon here? You have to know, hey, if I need this money, like this bank should have been knowing, is like, hey, I might need this money in 6 months or a year from now if indeed people try to redeem their deposits. Well, we should have some of that liquid, have enough liquid. Now, this was a very significant interest rate change, but I think this highlights just what really the financial markets have been through and the bond markets have been through in the last 12 to 18 months. Remember, what hurt this bank and what happened when interest rates went up is if you have cash today, it can be a positive for you because now you've got many options, like we talked about last week, that are paying a higher interest rate than what they were in the past.
All right, thank you so much, Ben. Well, if you have any questions or concerns or need help building a purposeful retirement plan specific for your life and your plan, give us a call. Our number is 320-222-4236. You can request a meeting online at taatjesfinancial.com. And if you are in the neighborhood, just stop by our office. We're located right on 19th Avenue Southwest in Wilmer. Thank you so much for joining us today on Time, Talent, Treasure Radio. I'm your host, Jared Sebesta. Have a great day. We'll see you next time.
Securities offered through Avantax Investment Services. Member FINRA SIPC. Investment advisory services offered through Avantax Advisory Services. Insurance services offered through an Avantax affiliated insurance agency.